All right, welcome to another episode of the Multifamily Masterclass. I'm Jamison Manwaring, CEO of Neighborhood Ventures, and excited to have Heidi Butler, our head of finance, and Bart Dill from Investor Relations joining us today as well. Hey, guys.
Hello,
Howdy.
hello.
So we're going to jump right into it with some really important insights about what's happening with the multifamily market nationally. So there has been a lot of new apartment units coming onto the market across the country, including in markets like Phoenix. This was driven by low interest rates a few years ago, and these projects were started a few years ago, and now they're just getting completed. And so we're seeing some markets as this new supply of housing come on the market that rents and occupancy have come down. Phoenix was the number one market last year with over 20,000 new apartment units that came on the market. So we had a lot, but things have actually stabilized pretty well in Phoenix. And we're going to look at the list of the top 10 markets that have the worst apartment occupancy. And I'm just going to give a little sneak peek. Phoenix isn't on that list, and that's
Woohoo.
a good thing for us. It's important to kind of know what's going on, and that is one factor that can impact multifamily is the supply of apartment units that are available, and that the new construction of those units as they come on, just with what we learn in Econ 101, supply and demand, as more supply comes on the market and the demand stays the same, then the price goes down. And the inverse is also true. As demand stays constant and supply goes down, price moves up. So we're going to look at some of these worst occupancies in some of these worst markets. And this is according to RealPage. So the worst performer in May as far as occupancy was Myrtle Beach, and vacancies in Myrtle Beach were at 90%. So that's pretty low with multifamily. So if you're looking at different types of assets, 90% occupancy might sound good, but for multifamily, that's pretty low when you're looking at from a macro view. So number one was Myrtle Beach. Second to that was San Antonio. So we hear Texas is a great place to invest. Everything in Texas is going to grow and just keep going up. Texas, their occupancy is now down to 91%. Augusta and Baton Rouge, which is at 91%. And then that's followed by Memphis, Jacksonville, Colorado Springs, Cape Coral, Fort Myers, Corpus Christi, Shreveport, Lubbock, and that rounds out the top 10. Those were the worst. But all major Texas markets, Dallas, Fort Worth, Houston, and San Antonio's had occupancy of less than 93%. So what's happened in Texas over the last several years when it comes to multifamily is there's been too much building that's gone on there. There's a lot of new apartments that have come onto the market, and that does impact occupancy. And the other thing that I would point out that stands out to me is a lot of these are tertiary markets. They're not core markets that have large population centers. They tend to be a little smaller cities out in the outskirts, and those are the markets that tend to get a little soft when it comes to occupancy.
Yeah, if you were to have me guess what were the top five, I would have guessed some of the bigger cities like San Francisco, LA, New York. But given the amount of people that live there, and there's really not a lot of new construction in those places happening because there's so much development already there. So I would have guessed that. So it's surprising that you hear it's in the Gulf Coast and in places like Dallas, San Antonio, Austin.
Yeah, because those are the areas where people are moving from,
Yeah.
moving from the Northeast, moving from the Midwest down south. But we have to remember those are also the areas where people are building new apartments.
Yep.
So if you get a little over your skis in the building and that supply gets oversaturated, this is what's going to happen.
Well, I think another part of it that we're not even discussing is job market. And, a couple of these places I'm thinking of from your list there potentially had some bids out for some big jobs at the plantations, things like that were going to head out that direction. Ended up moving into more core areas. That's a huge factor. If you're looking at building in that area and all of a sudden 10,000 jobs aren't going to be there anymore, that build is still there. Those jobs aren't.
Yeah, and those, you have to follow the jobs. If you want to look at growth and migration pattern, you have to see where jobs are going. And, some of these markets, this might be a temporary thing, but it's something to be aware of as a multifamily investor. You're always looking at that supply demand. We're glad Phoenix isn't on there. And we're actually starting to see Phoenix recover, even though we were number one with new supply last year. And frankly, it's because the growth in Phoenix just continues. And all of the new companies who continue to come here, we're starting to see a leveling off in occupancy